$33 billion mega deal. That's what's on the cards after the board of miner Glenstrata backed commodity trader Glencore's offer. Welcome to today's Market Pulse. Let's get straight out now to James Hughes. He's Chief Market Analyst at Alpari. James, Glenstrata shares up 3.5% on this news. How much more is there on the upside?
I mean, I think there is a degree more, but we have to realise that the touting around of this deal has been there a long time, and what we've seen today has just been a board backing. But I mean, looking at how clients are trading on both of these companies, we've got clients over 90% of clients long on both of these at the moment. And I think the positivity is there to remain. I mean, I think going forward, we say this is only a board backing at the moment. I think this will go through. I think shareholders will give it backing in the end. So I think there is a degree more we can get out of this. There's a degree more positivity that's going to run through this one, and I think we're going to see a little bit more legs to the upside.
Is there any reason why shareholders wouldn't vote this deal through?
I mean, to be honest, I think it's a bit of a not necessarily a strange mix-up, but between a trader and a commodities firm, commodities trading firm, and a commodity firm itself. I mean, I think that is when we first saw this, could be almost described as a bit of a conflict of interest, but you can see the parallels in there and see why this would work. I don't think there's necessarily too much in the way that's going to stand in the way. I think shareholders like it. I think the price will be okay, and I think overall it's going to be seen as a positive move. I think not just for Glenstrata. I mean, we talk about mining consolidation a lot. I think we've been talking about that for almost 3 years now, but there will always be that talk that's going to spark yet more.
You say 90% of clients are long both stocks, Glenstrata and Glencore. What sort of clients are we talking about here? Are we talking about sort of your short-term traders or long-term real money fund managers?
I think a bit of both, to be perfectly honest. I mean, there's been, of course, a big swing in, a swing in that today, but not necessarily too much in the ways of swings. And I think ever since this deal was touted around a few months back, I think there's been positivity surrounding it, and especially, and why I say I think this has got more legs, and why I think this will go through. The more positivity has been on the Glenstrata side rather than the Glencore side. So, I mean, I think the positivity is there. I think the backing will be there. I think the shorter-term traders have got in. Riding that crest, the crest of the wave as they usually do, but I think looking towards the heavier hitters, the bigger fund managers, I think their support is there for it as well. So that's why I think there's that positivity and that shareholders will start voting this through.
Now, Glenstrata, as we've discussed, is up quite a healthy 3%. Can we expect this to give the mining sector in the UK a boost? And by extension, given the weight of the mining sector in the FTSE, can we expect the FTSE to outperform its European peers, all else being equal, of course?
Well, I think it's going to give a boost to the mining sector. I think that's always going to be the case. We've seen stories about this sort of consolidation in miners and M&A in the mining sector a lot. It gives a short-term shot in the arm, and then we seem to run higher. But again, I don't think this story is too big to take over the global economy stories that are going on. And of course, the Eurozone stuff. We had those bank stress tests in Spain on Friday, and that is the real positivity that's going around the market at the moment. That's why European indices are outperforming the UK today so far, because you've got that talk of Spain acting a little bit quicker, even as early as this week. So I think there is a degree of movement in the miners, and probably a degree more to come in that. And the way our clients are looking, they're longer of this. But I think there's too many overall worries, as we've been saying about every M&A story that comes out recently. Is all a short-term move and short-term positivity, but you can't ignore the overall underlying factors in the markets at the moment, these global economic worries.
Okay, just to finish up, I think you touched on it there. You mentioned short-term positivity. All the evidence would suggest that these big multi-billion-dollar mega deals, Vivendi management, Time Warner, AOL, etc., they point to big gains for the bankers involved, for the lawyers involved, for the board getting their bonuses, but ultimately they destroy jobs and shareholder value.
Absolutely, and the shareholder value and the job side is the biggest issue that we've got in this. I mean, you get mergers, you get consolidations when you go through times of economic strife, and I mean, you can look at this at both ways. Companies coming in and acting together and merging together in order to get through the tougher times, but you can also see it as some firms with money to spend. So it can go both ways, but the unemployment thing is a key issue. But I think overall, the fact that you've got this sort of movement in the market, you have to see it as a positive sign that almost we're getting back to a sense of, it's hard to say sense of normality, but M&A in the marketplace is what we were all used to before global economic strife came in, and we want that back again.
OK, James, thank you very much. My thanks there to James Hughes from Alpari. That's all for now, but do join us each weekday for Market Pulse, a snapshot of what's moving on financial markets and why. I'm Jamie McGeever. This is Reuters.